Hey, what's up, guys? Good morning and happy hump day. This is Taylor getting things kicked off for the 9:28 session. Miss Mimi, good morning. Good morning, Mirza. Mirza, I think you gave me some of the best advice I've ever gotten the other day. What did you say? Be where your feet are. I like that a lot, man. Good morning, Miss Lorna. All right, guys, we are good to go here on video and audio. So we'll dive in, guys. I mean, me and probably everyone else in the market, we're all watching this key level of support here. So I think the big question is, does the market roll over and die from here? And there's a pretty good chance, but we're also a little bit oversold. Is there the chance for, let's call it a double bottom? Because we can bounce a little bit. Think of yesterday's session. You come down towards support, you get your little bounce, you fade. It's not very constructive. So the question really is, do we fall apart? Or could we get a little bit of a trend, to the upside going off a key support? So the focus of the morning is the recipe for the double bottom. So we'll take a look at each of these things, but we'll kind of rip through them real quick. First things first, I think you want to see the VIX under 30. Right now, the VIX kind of looks like it's setting up for a big move, which of course is a problem for the market. So we need VIX under 30. The dollar, of course, is wreaking havoc on everything. So as long as the dollar is strong, I think it's going to be a little bit difficult for the market to actually rally off of support. So I think at a minimum, you want to see the Dixie under 113. And then for the junk bonds, HYG, I think you want to see those bad boys back above 73. And then the last piece of the puzzle, guys, the monthly charts are getting sketchy. The weekly charts are busted. The daily charts, they're a disaster. So if we're going to get anything going to the upside here, that progress really has to start under the surface. So for conversation's sake, let's say we're looking for a move in the S&Ps. They hold support and we're looking for a rip towards, for conversation's sake, let's say 3,800. For us to get to 3,800, the 5-minute, the 15-minute, the 30-minute, all these lower time frames, they've got to transition from bearish to neutral to bullish. In other words, to get up there towards 3,800, your 5-minute chart has to go into an uptrend. Your 15-minute chart has to go into an uptrend, etc. So we'll start here, guys. But as far as improvements on the lower time frames, and I do think the futures are bouncing a little bit. Let's see. I don't know if you call that a bounce. But a good example of what we're looking for here. And take this mindset to every time frame, but it's kind of like it's like a graduation process. So if you guys check out the big 3 indicator up here, or over there in the right-hand corner, we've got sell signals on the daily, the 4-hour, the 2-hour, the 1-hour, and the 30-minute. So it's a lot of bearish pressure, in the background. 15-minute chart goes neutral, and the 5-minute chart goes neutral. Right? So there's a little bit of progress. Those lower time frames going from bearish to neutral, that can, at best, that can kind of bring an end to the bleeding. We're not going to rally from that alone, but it can bring a stop to the, the selling pressure in the short term. But if we're going to rally from here, we got to get some bullish trend going on those lower time frames. So, for a few basics here, right? What is bullish trend on lower time frames? And then take this list and apply it to the 5-minute, the 15-minute, the 30-minute. And more importantly, the absence of these things should pretty much tell you the chances of a rally are a little bit slim. So what is bullish trend on a lower time frame? Right? I think trading above the 21 EMA and the 50 SMA, got to be above those 2 moving averages. I think you want to see 21 EMA and the 50 SMA also trending higher. We'll call it pointing higher. We need a big absence of sell signals So as far as that goes right now, we've got a lot of sell signals. The only things that have slightly improved are the 5-minute and the 15-minute. So that tells you your 30-minute chart, it's still a problem. Your 30-minute chart is still in a downtrend. Under the 21, under the 50, both of those moving averages pointing lower. We have to reverse all of this to potentially see a rally off of support. So there's a few basics. What is bullish trend on lower time frames? Trading above the 21 EMA and the 50 SMA. Both of those moving averages pointing to the upside in an absence of sell signals. So let's take that criteria and look at the 5-minute chart. And obviously, guys, we're looking at a 5-minute chart. All right, we're above the 21. We are above the 50. But I wouldn't say that either of those moving averages are trending higher. The 50 is still falling, and the 21 is kind of flat. Right. So bullish trend on the 5-minute chart is going to look a bit more like this. You're above both moving averages. To an extent, both moving averages pointing towards the upside. So even though we don't have any sell signals, I would say going into the open, the 5-minute chart is not in an uptrend. We need the 5-minute chart to go into an uptrend to have any chance here of seeing the S&Ps rally off of support. All right, how about the 15-minute chart? We're not even close. So notice how yesterday morning we gap up. When we gap up in a market like this, always wait for a dip. Find a time frame that's making improvement. And yesterday morning, it was only the 15-minute chart. And what I mean by that is, even though we gapped up, look at the 30-minute chart yesterday. Well under the 50, you're still rocking sell signals. It's not too much of an improvement. The 15-minute chart at the open, a little bit of improvement. You gap above the moving averages, you get that positive moving average cross. Wait for the first dip. Especially when your 30-minute, 1 hour, 2 hour, 4 hour, and daily charts still have sell signals. And of course, on the first dip, all that progress gets thrown out the window. So the 15-minute chart is nowhere near an uptrend. And of course, if we go from there, the 30-minute chart is in a downtrend. The hourly chart is in a big downtrend. And the 2 hour, the 4 hour, the daily. So to put in that double bottom, it's not as simple as, hey, we hold support and we get a cute little bounce going. We basically have to shift the structure and shift the trend from the inside out. So no matter how long we sit here at support, if the 15-minute chart can't even get into an uptrend, well, then best case scenario, we just trade sideways. All right, so for now, not too much uptrend on the lower time frames. So keep a close eye on that. In the absence of that, meaning you buy a bunch of calls this morning and you're looking for that rally, your 15-minute chart can't even above the 50 SMA. You want to be a little bit careful being long. So one piece of the puzzle, we're looking for bullish trend on the lower time frames. Right? That can trigger the party back towards, higher prices. So one piece of the puzzle. The next piece here, guys, of course, is going to be, we'll do the VIX first. We're going to do the VIX, the dollar. We'll do the VIX. Huge problem right now. As long as VIX is above 30. And again, yesterday morning, the market pops. VIX comes in a little bit, but it holds 30 pretty good. And then, of course, you get that push into the close. VIX above 30. I think you could see this upwards of, $40 or so. Daily 4 hour, 2 hour, 1 hour, 30-minute, 15-minute buy signals with the big 3 indicator. So if I want to buy some calls on the S&Ps, I'm looking for a rally in the market. What I would want to see from VIX here, along with it being under 30, is for all these buy signals to start to disappear. As long as VIX is basically locked and loaded, daily 4 hour, 30-minute, 15-minute, there's a better chance this trades higher. And of course, if this trades higher, more pressure on the market. So VIX under 30, and you might be able to see the market get a little something going here. And we got the dollar here. Super, super, super strong. Now, here's the thing. It's a little bit overbought, right? So from the same perspective as, we're looking at the S&Ps here, and it's like, wow, it looks really bearish, but we're really oversold. Could we get a rally? You could also look at the dollar and say, hey, even though this is super strong here, we're a little bit overbought. Could we at some point get a pretty good flush here in the dollar? And of course, any flush in the dollar would be good for the market. But here's the thing: even though we're overbought, on the big three indicator, we have a buy signal on every time frame. So basically, you're in an uptrend on your daily chart all the way down to the 5-minute. Until that starts to crack, the 5-minute loses the buy signal, the 15 loses the buy signal, the 30-minute. Until that starts to happen, this probably wants to trade higher. Then take into consideration, again, even though we're a little bit overbought, we're only 3 days into the daily squeeze firing to the upside. So the rule of thumb, usually once the squeeze fires and you get your first green dot, we're typically going to look for about 8 to 10 bars of momentum. Kind of like back here. Daily squeeze fires long. Yeah, that gave you a good push. So I think Dixie under 113, maybe we can see a rally in the market. Again, not too sure how long that rally would last, but I think the chances of any kind of, let's call it a sustainable rally, I think the chances are pretty slim if Dixie holds above 113. And then last piece of the puzzle here, guys, is HYG. So HYG trades here at a new low. And to me, this is kind of like a heads up in terms of what we're going to see from the S&Ps and the Qs. So for a double bottom in the market, I think you want to see HYG back above previous support. That's up there around $73. Otherwise, you've taken out support. You've got a bunch of sell signals. Path of least resistance very much to the downside. So there's a few things, guys. Don't make it as simple as, hey, if we can hold support here, I'm going to jump in and buy some calls. All these pieces have to come together. VIX under 30, the dollar under 113, HYG back above 73. And then I think at a minimum, you want to see the hourly chart. Actually, you know what? At a minimum, you want to see those, those uptrend characteristics to the 30-minute chart. That means we're back above the 30-minute 21. We're back above the 30-minute 50. We want to look for that positive moving average cross. And then you want to start to see the dips actually hold support. Right? Higher highs, higher lows. So the absence of all those things, or in other words, VIX above 30, the dollar above 113, and HYG under 73, even though the market's pretty oversold, I think you're looking for more downside. So quick look here at the futures. Yeah, we're pretty quiet here. So I think those are things to focus on for, the remainder of the week. For a few bigger picture things, I think is really, really important here. These are all things that I covered in my in the YouTube video on Sunday. As far as the monthly chart goes, it's getting pretty interesting here, guys. So, from a monthly charts perspective, the market is still in an uptrend. Even though we've pulled back from 4,800 to, let's call it 3,600, which of course is nothing to sneeze at, we're nowhere near a monthly downtrend. And I would argue the uptrend is pretty much intact here to the extent you're trading above that 50 SMA. So in other words, in terms of like a bearish market environment, the party hasn't even started here on the monthly chart. Now, on a monthly basis, if we start to close under the 50, then I think the party really starts. Also, take into consideration we have a monthly squeeze. And more importantly, we have the first negative histogram here on the monthly chart since 2008, which of course was a bit of a doozy. So I'm not necessarily calling for a financial crisis. The point being, for those of you that trade the squeeze, and for those of you, you're in the options room, you're in my mastery, let's look at this monthly squeeze like we would look at any other time frame. So let's pretend it's like a 15-minute or a 30-minute chart. And in terms of the probabilities of a squeeze firing long or short, right, squeeze probabilities, it's a couple of basics. Above 21 EMA with a positive histogram, positive histo, so odds favor squeeze fires long. Under 21 EMA with a negative histogram, negative histo, the odds favor the squeeze fires short. All right, so again, pretend it's a 5-minute, 15-minute, 1-hour chart. As long as we're under that 21 EMA, as long as that 21 EMA, right, slowly but ever so slightly starts to point down, and as long as that histogram is negative, we want to look at that as a squeeze that for now is gearing up to eventually fire short. And given that it's a monthly chart, of course, it could always take a little bit of time. But the point being, yeah, the move from 4,800 to 3,600, it's been a big pullback. But in terms of trend and structure, we really haven't even put a dent in the monthly chart. Now, if we can't quickly improve things here, and how do you improve this chart? You get back above the 21 and you shift that histogram. If the bulls can't do that, this all eventually looks like it wants to fire short. And obviously, being that it's a monthly chart, that's pretty big implications. Your entire COVID rally was basically just a monthly squeeze firing to the upside. Right, so monthly squeeze under the 21, first negative histogram since 2008. And then let us not forget we got this weekly squeeze here. So the last time the weekly squeeze fired short, your S&P's down a good $500-600. Right, we're breaking support around 4,200. We're coming on down towards 36. So my bigger picture target for the S&Ps, unless all of these things can be fixed. Again, what does that mean? Clean up the structure of the monthly chart, right? Clean up the structure of the weekly chart. Like, cancel out the growing probability that those two giant squeezes fire short. Then you got the VIX, and you got the dollar, then you got the bond market. But if we can't cancel those things out, my ultimate target here for the S&Ps is 3K. Right? A move down to 3K, which is, I don't know, what's that? Maybe it's like 15 to 20% lower, somewhere in that neighborhood, 15, 20%. A move down to 3K basically takes us back to pre-COVID. It basically wipes away that whole, cocaine and Fed-induced rally. And I think the template here, like the poster child, could potentially be Amazon. If Amazon takes out these recent lows around $100, Amazon finds itself trading back in that pre-COVID range. And I think, again, if we can't fix the monthly chart, if we can't stop that weekly squeeze from eventually firing short, I think that's going to be the theme throughout the market. Everything kind of wipes the COVID rally off the map. And that would take your S&Ps to that 300 range. That, of course, is all bigger picture. In the short term, the big question is, do we roll over and die and get that party going now, or do the bulls try to get something going off a key support here? But there you have it, guys. Hopefully the things we discussed this morning, hopefully you find them helpful. A few other things you could add to that list. Your Apples, your Teslas, they're really, really important right now. So, and here's why they're important. Google, they've already taken out Google, brand new low. So RIP to Google. Now, for what it's worth, 2-3 months from now, the S&Ps are at 3K. Google will be trading much lower. So this is only the low for Google if the S&Ps happen to bottom today. But in terms of taking it out behind the woodshed, RIP to Google. RIP to Microsoft. And again, that will trade much, much lower if the S&Ps do. But they've taken that out. They've taken out AMD. They've taken out NVIDIA. They haven't taken out Tesla and Apple. And of course, with these being two heavily weighted stocks, if and when they do, take Tesla down a good 20-25%. Never mind a new low. That's just down to the recent lows. And if they take Apple down to the recent lows, it's going to inflict a lot of damage on the overall market. So I think along with the VIX, the HYG, things of that nature, keep an eye on Apple here. Under 150. Shit gets nasty. Even under your daily 21. Apple not looking too hot here. So if Apple can't step up in a big fashion, and it looks like we're going to open up around 148. New low for Apple at the open. Okay, so there you go. This actually makes our job easy. We're going to open around 148. Yeah, 148. If Apple can't quickly get back above 150, big problem for the market. So there's everything I'm focusing on for now, guys. We only got one open trade right now. Got some October put debit spreads in Snowflake. And we're looking for more shorts. It's kind of a tricky spot. It's a tricky spot because you could have shorted Apple yesterday, and you're literally getting like the textbook entry. Daily squeeze, balance to the 21, rejection. That's the perfect entry. The problem, of course, is S&Ps and your QQQ are just so oversold. So in the event the QQQ rallies back to 290, even though you got a great entry on your Apple short, it's probably going to go against you. Where ideally the S&Ps rally, the Qs rally, then we short Apple. But if you guys got any questions, any charts you want to take a look at, let me know. And we'll bang out a few here before I got to jump into the options room and take those animals through the open. Won't be a dull one, though. Out of curiosity, guys, any Apple news? 147.50. I got to look into that. Hey, what's up, Andrew? Good to see you. All right, I'm going to jump over here to YouTube. See if we got any questions. Yeah. Hey, good morning, Anders. Yeah, Apple under 150. No bueno. No bueno. A few different reasons, right? 150-ish is kind of been key support. It's also a pretty big psychological number. To me, more importantly, there's not too much as far as technical support under 150, 148. I mean, there's really nothing until we're back down here at like 135. A lot of open air right there. A lot of open air. Pride and Envy. Let's take the ES. Weekly. I need my monthly. Yeah, same thing as SPX. So for the ES here, we get the same monthly squeeze. Of course, we're clinging on for dear life at support. And it's really, really slight. But see how that 21 EMA starts to point down a little bit? If that continues, it's just pressure on the market. Yeah, so kind of the same combo. What we have right now are nested squeezes. Right? So of course the biggest squeeze at the top of the squeeze hill is the monthly chart. Inside of that monthly squeeze, you got the weekly. And of course the weekly is bearish for now as well. Under the 21, under the 50. Histogram is negative. Both moving averages pointing lower. The 3-day time frame, no squeeze there. Nothing on the 2-day. And nothing on the daily. So for now, we're working with that combo of monthly, weekly. And again, my thinking is if you're under 4K, the odds really favor these squeezes breaking fire short. A move back above 4K doesn't fix all the problems, but at a minimum, gets you back above your weekly 21 and gets you back above, or it gets you close to the monthly 21. The third alternative, though, before I let you guys go, the third alternative, meaning, okay, maybe we do rally, or maybe we do roll over and die. The third alternative is we just trade sideways for a bit. So, of course, be a little bit careful with that. If you're buying, Friday expiration puts or calls, if we just trade sideways here, the theta will catch you. So maybe something to be said for, if you're bullish, maybe you do the put credit spread. And if you're bearish, maybe you do the call credit spread. That way, if we just kind of chop and trade sideways, you still got some premium coming on in. But all right, guys, I'm going to cut you loose here. I got to jump into the gold room in a couple of minutes here. I got to go heat up the coffee first. But as always, guys, I appreciate your time. I don't think we did a live session last week. So good to be back. Always a pleasure doing business with you. And let me see, today's Wednesday. Chandler should be live with you all on Friday morning to take you into the weekend. But I hope you all have a great Wednesday. Appreciate your time as always. And I'll talk to you soon. And Sunday morning, Sunday afternoon, I'll get the weekly watches video uploaded here to the channel. And we'll see how Mama Market fared this week. But good luck, guys. I'll talk to you soon.